You did not open your business to do this part. Nobody starts a beauty salon or a plumbing company or an Etsy shop because they love bookkeeping. But the receipts pile up anyway. The software costs a little more every year and makes a little less sense. And a lot of owners end up feeling exactly like this, drowning in the one part of the business they never signed up for. And what they actually want from it is so much simpler than the software they are paying for. Money in, money out, what is left? Nothing more. Meanwhile, that software costs more every year. One owner, almost 20 years in, added up $16,000 spent on tools they barely used. Another walked away the day the renewal jumped by nearly half. So when you start hearing that AI can just do all of this now, sort it, total it, answer any question about your money in seconds, part of you wants it to be true. And part of you does not trust a robot with your bank account and your taxes. Not quite ready to hand my finances over to the robots yet. That instinct is healthy. So instead of just talking about whether AI can do this, we ran a real test. We cannot put a real client's private books on screen, so we built a representative month. The crumpled receipts and the bank export and all. The kind of real small business actually deals with. Then we ran it through the exact tools everyone is arguing about, right there on the screen. You will watch where AI genuinely earns its keep, and you will watch the exact moment it falls apart. And you will leave with the same free prompt we used so you can run your own month tonight. What decides this is a single line running straight through your books. On one side is the work you can safely hand to AI today. On the other is the work that will quietly cost you more than a bookkeeper ever would if you trust a machine with it. Find that line and you take back both the money and the hours. Miss it, and you will not even know you were burned until the numbers are already wrong. Can AI actually replace your bookkeeper? Yes or no? Here is the honest answer before we prove any of it. No, AI cannot fully replace your bookkeeper, but it can take a real bite out of what you pay and the hours you lose. The reason it is not a clean yes or no comes down to one thing. Bookkeeping was never really one job. It is two jobs wearing the same name, and that is the line we just talked about. The first job is the mechanical work, taking what happened in the business and writing it down. A payment came in, a bill went out, this receipt was fuel, and that one was supplies. It is repetitive, it follows clear rules, and it quietly eats your evenings. The second job is the judgment work, deciding whether a charge is one expense or split across two, knowing which rule applies to your situation, making sure the books would survive someone checking them, and carrying the weight when a number turns out wrong. That second job is what a good bookkeeper or accountant is really for, and there is a reason the good ones cost what they cost. AI is genuinely good at the first job, and genuinely dangerous at the second. That is the whole video in one sentence. And to their credit, even the owners most excited about doing their books this way will tell you the limit out loud. One of them put it plainly: no balance sheet, in no way compliant with proper accounting standards, not a replacement for a $200 a month bookkeeper. That honesty is exactly why you can trust the rest of what they say. And if the money side is the part you have been quietly dreading, the mechanical half is where the relief is. Almost everything that makes you feel like you are drowning lives in that first job, and that is the part we can hand off today. What can AI genuinely do with your books today? So let us actually run it. And let us start with the gift, because you can copy this tonight and keep it. We wrote one plain English instruction, a single prompt that turns a general AI assistant into a careful bookkeeping helper. It is free, it is linked below, and it works in whichever assistant you already have open: ChatGPT, Claude, or Gemini. Owners always ask which one is best for this, and the honest answer is whichever you already pay for, because for the mechanical work, they land in the same place. And the good news is, you do not have to feed it your receipts one at a time. Most of these chatbots only let you attach so many files at once, around 10 in ChatGPT, around 20 in Claude, and a whole month of receipts blows right past that. So the easy way is to keep everything in one folder on your computer, your receipts and your bank export together. Then you point Claude's desktop tool, the one called Cowork, at that folder, and it reads the whole pile at once. No uploading one by one, it all stays right there on your own machine. So that is what we did. Our representative month was modeled on a small plumbing shop, the kind of pile a lawn care crew, a food truck, or a salon knows by heart. Fuel receipts and supply store runs, customer payments that trickled in late, a couple of crumpled ones you can barely read. We pointed it at the folder and gave it that one instruction. Sort all of this and tell me what you are not sure about. What used to be an evening of typing came back in about 2 minutes, already sorted and grouped, money in on one side, fuel and supplies and software on the other. The handful it was unsure about sat in their own list for a human to look at, and that part matters more than the speed. It did not quietly guess on the ones it could not read. It raised its hand. One of the charges it flagged was $1,247 at the hardware store. On the bank line, it looked like ordinary supplies, but the receipt told the real story. It was a pipe threading machine, a tool that lasts for years. Whether that counts as an expense this month or something you write off slowly is a call only you and your accountant should make. So it did not make it. It flagged it. That is exactly the instinct you want from a machine near your money. Then we asked it for the thing every owner actually wants: a simple picture of the month. Money in, money out, what is left? And there it was. Plain language, the kind of thing you can actually read instead of a report with columns you never open. It was honest about what it was, too. It called that summary a cash picture, not your final profit. A couple of the flagged items still needed a human to place them first. The big tool and the transfer that turned out to be the owner paying himself. A draft to check, not a record to file. Then we did the part the expensive software never really let us do. We asked the books a question, out loud, in normal words. How much did we spend on fuel last month? Who was our biggest customer? It answered right away. The fuel adding up across 5 fill-ups, the biggest customer, that one large HOA job, the way you always wished your software would. The real win is bigger than the time saved. When the mechanical work takes minutes instead of an evening, you stop avoiding it. You start the month actually knowing where you stand, instead of putting off the banking app because you are afraid of what you will find. One owner who has run their books this way for a few months says the whole monthly routine now takes about 15 minutes. Another put the shift simply. AI does most of the work now, and their job is reviewing it instead of grinding through it. That is the realistic version of the dream. And for the mechanical half of your books, it is genuinely within reach. Where does AI quietly break on your books? That was the easy half. Then we pushed the same tool across the line, onto the judgment work. And this is exactly where owners get burned. Getting burned here does not look like a disaster. It looks like everything is fine. We asked that same assistant to stop helping and start being the actual accounting system, to keep the real books. And it handed back something that looked right and was not. No real balance sheet underneath it, none of the careful double-checking a proper set of books has to hold up to, which is exactly what the owners who actually tried this warned about. One of them said it in plain terms. A general AI chat keeps no balance sheet, and it was never built to the strict standard your books have to meet. So the moment you are an LLC or an S-Corp instead of a one-person shop, it is out of its depth. For a sole proprietor who just needs to see profit and loss, it is fine. As the system of record for a real company, it is not. The second failure is the one that should make you careful. These tools can be confidently, completely wrong. An accountant who uses them every day put it bluntly. It is covered in errors, and he is constantly correcting it. But that is not a reason to avoid them. The safest hands on these tools belong to people who know enough to catch it when it invents something. There is a simple habit that helps here, and it is built right into the free prompt. Give the tool your rules in writing before you let it work, so it stops filling the gaps with guesses. But even then, every number it hands you is a draft to verify, never a fact to file. It also stumbles on the mess that real businesses actually run on. The receipt with two things on it that belong in different places. The charge that could be supplies or could be equipment you will use for years. For a trucking company or an auto shop, that mess is the normal week, not the exception. And even the accounting software you already pay for is bolting its own AI on now. It's the same underlying technology, so expect the same split. Strong on the mechanical work, not the magic button the ads promise. So if your books are small and a simple system is keeping you honest, you are not behind for keeping it. You are matching the tool to the size of the business, which is the whole game. Is your bank data safe with these tools? There is one more question here, and it matters more than any feature on any of these tools. What happens to your bank data? One owner asked it about as bluntly as it can be asked, whether the company behind the tool could simply help itself to all of their financial information and their bank accounts. That instinct is the right one. And the reassuring part is that the fear here is bigger than the fix, because staying safe comes down to 4 simple rules. They're the 4 rules that come attached to the free prompt. The first is the simplest. Never paste a real bank login into a chatbot. Second, when you connect your accounts, use a read-only link, the kind that can look but can never move your money. That is exactly what the bank connection service Plaid is built for. Third is the version you use. Lean on the paid business tiers of tools like ChatGPT and Claude, the ones that promise not to use your data to train their AI, rather than the free consumer versions. As one owner put it, your bank info is not really secure until you are at least on the business tier. And if security is the part that keeps you up at night, the purpose-built bookkeeping tools were designed around exactly this worry. Digits is the name that came up for owners who want that. Built to wall your financial data off in a way a general chatbot simply is not. And fourth is about what you let a tool do on its own. Anything with reach into your accounts and your files can be tricked by a bad link or a file someone sends you into doing something you never asked for. One owner asked straight out whether someone could quietly hijack the assistant through what is called a prompt injection. The honest answer is that it can happen. So keep a human signing off on anything that actually moves money. Do those 4 things, and if a tool still cannot give you a clear, plain answer about where your financial data lives and who can reach it, that silence is your answer. Which setup is actually right for your business? The right setup really comes down to which kind of owner you are. Less about picking one magic product, more about an honest look at what your business actually needs. If you mostly need money in and money out, nothing more, your lightest path is a simple, low-cost accounting tool. Some of them, like Wave, are genuinely free. You pair that with the Quick Win prompt for the sorting and the plain English questions, and for a lot of solo owners, that is the whole stack. If you have a real company structure and more moving parts, the honest setup has 3 pieces working together. Proper accounting software for the books that have to balance, an AI assistant doing the mechanical work right beside it, and some owners are already wiring it to drop entries straight into that software instead of replacing it, and a human checking the judgment calls at the edges. AI sits next to your software here, not instead of it. And if the numbers genuinely scare you, or the stakes are high, there is no shame in keeping a bookkeeper for the judgment and letting AI shrink the hours they bill you. That is often the smartest money a business spends. One thing is worth saying plainly across all 3. AI amplifies a system you already have. it does not create one for you. Chaos going in is just faster chaos coming out. The owners who win this decide on a simple weekly rhythm first, a regular time when the money actually gets looked at. Then they let AI turn that rhythm from a lost afternoon into a quick, almost boring chore. That weekly habit, not any tool, is the cheapest path to calmer books. Which tool actually fits your business is its own question, and the cheap first-year deal is where it usually goes sideways. The price looks great the first year and climbs every year after, which is the part most comparisons skip. So we put the main accounting tools head-to-head, QuickBooks against Xero and the simpler alternatives, on real ongoing cost and what each one is genuinely good at. That comparison is linked in the description, and it picks up right where this leaves off, once you have decided what you want AI to handle. And if you're still finding your feet with the basics of bookkeeping itself, there is a plain English beginner's guide linked right alongside it. What should you do this week? You do not need to overhaul anything tonight. 3 small steps put you ahead of most owners. First, grab the free prompt linked below. Gather 1 month of receipts and bank activity and run it through one AI assistant, just to sort and summarize. Treat it as a test, the same way we did, and notice how much of the mechanical work it genuinely takes off you. Second, before you connect anything to your real accounts, run back through the 4 security rules from a few minutes ago. They're short, and they close the biggest risk. Third, draw the line on paper between the mechanical work you are happy to let AI do and the judgment work you will keep a human on. That single line will save you more money and more worry than any tool you could buy. Running a small business already asks enough of you. The whole point was never to turn you into an accountant. It is to take the part that wears you down and make it small, so you can get back to the work you actually open the doors to do. If which tool to trust is the question on your mind now, that head-to-head comparison is linked below. Subscribe so you do not miss the next tool we put to the test, and drop a comment with the one part of your books you would hand to a machine tomorrow if you trusted it completely. We read every one, and it tells us exactly what to test next.